We saw a huge spike in Nike's stock price right after the September 22nd's earnings were released. Is there still a chance to make some money with Nike, or have we missed the boat? In today's video, we're going to take a look at Nike. Welcome back to the channel, family. My name is Trey, getting in touch with you from Japan. Today we're going to be looking at Nike. Generally on this channel, we're looking at stocks and different kinds of investments, but we're also looking at entrepreneurship, mindset, different things like that. Starting up here in the next couple weeks, I'll be starting a bit of a series on how we got started here in Japan, some of the different business things we've been doing over the years. Hopefully it's encouraging, challenging, fun, and exciting for you, especially if you're thinking about entrepreneurship in the future. So looking forward to sharing that with you going forward. But anyways, in today's video, we're gonna be looking at Nike. Basically, everybody's familiar with Nike. I think growing up, I owned some Nike stuff here and there. I don't really know many people who are just like, Nike's the best, I have to have everything Nike, except when it comes to Jordan sneakers. But basically for me growing up, it was kind of like, yeah, if a shoe is nice, I don't mind if it's Nike. You know, I'm not gonna prefer Nike going out there looking only for Nike stuff or whatever. And there were a lot of times for me in my life growing up where I was kind of like, yeah, I just need a 20-buck shoe. It's not a big deal, whatever. Oh, here's some Nike ones, I'll buy those. In 2017, we saw Nike make a big shift in their strategy and the way they offer their products, and I'll get into that in a couple of minutes here. So for me, with that image of Nike growing up, I didn't really know what to expect. I expected Nike to be big, but it turns out indeed they're the biggest athletic sportswear brand with more than $37 billion in revenues in their last completed year. As you probably already know, Nike's primary offerings are made up of like shoes, apparel, accessories, but I was interested to see on their website recently that they've started to branch out maybe into more like hiking, outdoorsy type, you know, North Face type segment or Patagonia type stuff. Check it out here. They have the men's Sherpa category, kind of stylish looking outdoorsy type stuff, which is interesting to see. That being said, they are the world's leader in athletic wear and they have a market cap of more than $200 billion. They ship to 190 countries. I didn't even know there were that many countries, but they ship to 190 countries and they're involved with more than 7,000 stores around the world. Additionally, they ship more than 800 million pairs of shoes each year. I can't even like wrap my mind around how many shoes that is. That's crazy. That shows you the scale that we're looking at here with Nike. They dominate in a few of the segments that they're operating in, particularly running and basketball. You're probably familiar with the long-running Air Jordan brand. Shout out to my man Ali, who came over to my house with his fresh new Jordan sneakers in high school, only to have my dog run up and quickly vomit all over them. It was so absurd that it was hilarious. We grew up watching The Simpsons and Family Guy and stuff like that, so we were just dying, even though his like $200 shoes just got puked on. Anyways, what up, Ali? Hope you're doing well. Anyways, I did do a video recently on a brand called Lululemon, which kind of is a pioneer in the athleisure market, which is more kind of like premium, and it's kind of like, yeah, use this for working out, but you can also use it to just look cool. And they're very expensive clothes and they're very well made and they're very premium. One of the things I was kind of concerned about looking at Nike was like, are these two gonna be competing with each other really hardcore or not? Turns out that, yeah, Lululemon kind of is targeting a more affluent market, but Nike is starting to kind of rebrand themselves from that image that I had of them growing up, from being like, they're like sporty, but they're just super cheap and they don't really last that long type of brand, to something very different. And I wanted to get into that here by talking a little bit about their strategy change in 2017, what they call the triple-double strategy. But basically they realized that they're working with far too many retailers, and what happens when stuff doesn't sell is that it has to end up in the bargain bin. And when people see stuff in the bargain bin, they're kind of like, oh, this is probably a crappy product. Oh, there happens to be a lot of Nike in here, therefore Nike equals crappy. And that's one of the problems that you have when you're just shipping to every single store and you're not really picky about who you partner with. And so we saw Nike start to change their strategy in a few different ways. One way was that they started to focus on direct to consumer, which means making their own privately run stores called Nike stores, as well as e-commerce and apps, and starting to market more through those methods. We also saw them narrow their partnerships. Instead of just selling shoes to everybody, whoever, wherever, we saw that they started to restrict the number of stores that they're working with. So you might remember that I did a little video on Foot Locker a little while back. Nike and Foot Locker are really good buddies, and Nike sells a lot through Foot Locker. So that's one of the partners they're going to continue working with. And Foot Locker as well has also kind of been making efforts to step up their kind of like brand image to be a little bit more premium, a little bit more high quality. And Nike has also partnered with companies like Dick's Sporting Goods and Nordstrom's. They've been cutting out a lot of the like cheaper, more discounty feeling shops in the meantime. And another part of this triple-double strategy was to narrow down their product offerings by about 25%. So that means rather than just trying to do everything, they're kind of niching down and doing the things that they do well even better. Another part of the strategy was that they wanted to cut in half the amount of time it takes to design and create and produce and ship all of their products. So basically, this whole strategy is to kind of niche down and focus down with a more specific store set, even more premium products, and therefore raising their margins and raising their brand image from what it was when I was little. This whole triple-double strategy that they implemented a few years ago has been really paying dividends in the last few years. We see that they're continuing to grow, their margins have gone up, and they're also starting to take on a bit more of a premium brand feel, especially when partnered with all the different athletes that they work with exclusively around the world. As you know, in these times of pandemic, retail has been kind of having a tricky time, but you might remember from my earlier Foot Locker video that I mentioned that there was some pent-up demand after everybody was locked down for so long. Basically, we saw lockdowns start to free up, and boom, Foot Locker sales went crazy, stores were packed, and they had a really good quarter. What ends up happening when Nike's selling their stores in Foot Locker is that Nike also benefits from that. And so we're seeing that even though the pandemic has slowed retail down in a big way, it hasn't slowed things down nearly as much as a lot of people were expecting it would. And so in a minute here, we're going to look at some of the numbers from the last quarter. And what you'll see is that they were way better than expected, even though compared to previous quarters or years, they were still down. And so because they were better than the expectations, basically the stock market took off like a rocket. It jumped a good amount just in that one day after earnings. But yeah, going back to what I was just saying about kind of rebranding their image and starting to be able to charge higher prices because they're higher quality, so to speak, is if you go on footlocker.com, if you look at the $170 plus shoe bracket, basically 90% of those shoes are Nikes. And that's a really good thing for their brand. You can go, like, there are so many people around the internet who just basically buy shoes and show them off. And one of the really crazy things that we're seeing is that there are loads of Nike shoes that are $300, $400, $500, $600, $700, and they're just selling like hotcakes. And that bodes really well for a brand like Nike, who's kind of trying to reposition themselves in the market. So let's dive into the last quarter's earnings report and take a look at some of the numbers. First quarter revenues were down 1% to $10.6 billion. But this is because of the pandemic. But as I mentioned earlier, people were only expecting them to do about $9 billion in sales. But because they did 10.6, people were really surprised and pleased with those results. Nike direct sales were up 12% or 13% on a currency corrected basis to $3.7 billion. So the difference between the currency corrected basis and the other one is basically that because currencies are always changing, they'd need to do a little bit of math to ignore that change. So basically right now, $1 can buy you like 105 yen or something like that. Sometimes it's 110 yen, sometimes it's 70 yen, and that's always changing. So they need to do math to make the accounting smooth, to ignore those variables so that they can compare apples to apples between all the different quarters. Nike brand digital sales, and I think this includes selling through other companies' websites, were up 82% or 83% on a currency corrected basis. This includes double-digit increases in North America, Greater China, the Asia Pacific Latin America region, and triple-digit growth in emerging markets. Diluted earnings per share for the quarter was up 10% to 95 cents, and inventory rose 15% versus the prior year, but decreased 9% from the previous quarter. So they mentioned that inventories rose 15% over the prior year, but dropped 9% compared to the prior quarter. And what that means is basically the amount of inventory they have in their hands or in stores is going down. And that's a really good thing, because if you end up having way too much inventory, let's say, hey guys, we're gonna sell 10 million shoes in this month, so we need to send 10 million shoes and have them in the stores ready to be purchased for that month. Let's say they only sell 5 million shoes. Now they're kind of like, dude, we gotta get rid of these 5 million shoes before our next shipments come in for the winter season or for the back to school season or whatever it is. So they end up having to mark those down. So having some inventory remaining isn't a bad thing, but having too much inventory remaining can be really destructive, because you basically have to pull your prices down and therefore pull your profit margins down too. So getting that forecast correct for retail companies is like super important. Should also mention in the report that they have a good record of 18 consecutive years of increasing dividend payouts. This year, they're up 11% year over year. Interestingly, when everything went pear-shaped in March, rather than the company suspending their dividend payout, they chose to suspend their share buybacks, their stock buybacks. And that bodes really well for dividend investors, for people who love to have the stock because of the dividend. But it also shows that Nike has a very high priority on paying that dividend out long-term consistently. And by suspending share buybacks, basically they can use that money to just make sure that it's safe for that dividend. When you lose the share buybacks, you lose kind of that, the company's always buying the stock, so the price is always kind of going up, but it's not necessarily a super terrible thing. And actually, we'll see here in a minute that their cash and cash equivalent holdings this quarter have gone up significantly, which is really, really important when considering how much things might be changing in the coming months and maybe even the coming years with the pandemic, with a new election, with a lot of market uncertainty happening. Interestingly, when you take a look at how well Nike does with the money they invest, also known as adjusted returns on invested capital, they average 34% over the last 10 years. This is astonishingly high. And when you take into account how much it costs a large company like Nike to get money, to borrow money, which is probably 8 or 9%-ish, especially with interest rates really low right now, that's kind of like an infinity money hack. Like you borrow for 9% and then you invest and get a return of 30%. That's pretty crazy, and not a lot of companies can do it that well. And that's interesting to consider, especially in a minute here, we're gonna look at their debt to equity ratio and things like that. The numbers look bad, but when you think about how much they can do with borrowed money, it kind of gives us a little bit of reassurance. Also wanted to mention that e-commerce sales have grown double digits over the last few years. Nike expects to see those digital sales providing up to 50% of their total sales eventually in the coming years. Generally speaking, we're seeing 7%-ish net margins, which is refreshing despite the pandemic conditions right now. Management expects to see more clearly defined growth going into the second half of the fiscal year, so after this coming quarter. I'm really interested to see how this current quarter that we just started shapes up, especially with a really weak back to school kind of period going on right now. Mentioned earlier that they've been saving up cash. They've managed to beef up their cash position by almost double compared to last year, from $4.4 billion to $8.3 billion. And including cash equivalents, their total liquidity sits at about $9.5 billion. So basically, when you're looking at different assets, if you have factories or huge buildings, those aren't very easy to sell, so they're not considered liquid. But there are things that you can have like stocks, where you can just go sell, done, boom, now I have the cash. That's called liquid because it's very easy to turn into something that you can use to pay. And so all that to say, their cash position and their liquidity has been growing significantly in the recent quarters. I think this is really smart on their behalf, especially with all the uncertainty coming up. But it goes to show that Nike is a very kind of safe company and we don't have a lot of risk if we're going to be investing in them. That being said, their long-term debt to equity ratio, which was 0.38 in 2019, has gone up to 1.17 in 2020. Similarly, their total debt to equity ratio has also gone up. And again, like I mentioned earlier, there's kind of a lot going on, but they can borrow money for cheap and invest to make a lot more money. And they have this huge amount of cash on hand. So I don't think it's a really big concern right now to look at that and be like, wow, there's so much debt going on compared to previous quarters or years. Should also mention that the dividend payout ratio is also a healthy kind of 25-35%. Recently, they raised their payout ratio by about 11% to just under a quarter. 25 cents per share. The annual dividend yield for investors sits at only about 0.8%. So it's not one of those big juicy dividend stocks that you want to have like leading your dividend portfolio or anything like that. But if you wanted to have it just for appreciation over the years, having that dividend makes it just a little bit more delicious, if you know what I mean. So taking a look at some of the concerns I have for Nike going in the future, generally speaking, I think they're a really safe company, and I think we don't have a lot to fear in terms of the stock price fluctuating really crazy or the company being in dire straits anytime soon. Looks like they're doing really well in China and kind of emerging markets as well. But one of the concerns I wanted to mention is that compared to Lululemon or Vans or Adidas, they aren't growing as quickly in North America anymore. But one of the things these kind of more luxurious brands are starting to do is pull in a whole segment that never really looked at athletic wear before. So I think it's not that shocking that these companies will be growing at faster rates. I'd be really interested to see if Nike tries to take a step by making a new brand to compete with companies like Lululemon or VF Vans or things like that. Another kind of concern just to think about, I don't think it's like a really huge deal, especially with trade disputes kind of slowing down in the recent months, or maybe even more than that. Basically this whole year there hasn't been any really crazy trade disputes going on, but they have 400 factories all around the world, and a lot of them are in China. And so when there are trade disputes between America and China and they say, hey, we're gonna charge tariffs on anything imported from China or things like that, basically prices have to go up and therefore sales will probably go down. That being said, Nike has factories not just in China, but all over the world. So that being said, I don't think it's like a huge, red alert, like avoid this stock because this threat exists. It's just something to consider for you if you're thinking about investing in the stock. Additionally, on that topic of factories in different places, Nike has had a very not super awesome reputation when it comes to like fair trade and paying a living wage and things like that. They were doing much better, and then they kind of like lost some steam. Now when I look around on the internet, it's kind of like, hey, you guys are off to a good start type thing. There is this fashion transparency index, which has given them a 51 to 60% score. So all that to say, it's not like terrible, it's not abysmal. I don't really know if they're making a huge push to become, kind of the next Patagonia that's like allowing the entire world to work like super sustainably or things like that. If that's something that's morally a problem for you, I would suggest not investing in Nike because they haven't really gotten, a whole lot better. They're better than they used to be, but they're by no means like exemplary on this front. So I know a lot of people who are just kind of like, nope, never buying Nike. I don't like the way they impact the world. And I respect that. Personally, I don't have like huge qualms with it. That's kind of a whole topic for another video. But all that to say, would I invest in Nike right now? So I do not own Nike. I wish I had owned Nike from a few years ago. They've been growing really well, and I think we're gonna see double-digit, kind of growth rates going into the coming years, maybe even till 2030, 2035. A lot of the analysts are really, really pumped about Nike. The stock price currently is about 140-ish. I personally feel like that's a little bit too much for what you're getting. If we could get in at kind of like 120 or 100, that'd be pretty juicy. And again, I feel like it's kind of like the Costco video I just did. It's just one of those companies that's never really gonna go away. Really, really solid financials, really, really good market position, really wide moat. They don't have a lot of threats, they don't have a lot of competitors, and they're standing firm even when competitors do kind of step onto their territory. So those are my thoughts on Nike. What are you gonna do with Nike? Do you already own Nike? Are you gonna be buying more? I'm looking forward to hearing your thoughts down in the comments section or over on our subreddit. Thank you guys very much for watching this video all the way to the end. I know that there are a lot of YouTube channels for you to choose from, and so the fact that you chose ours is really, really encouraging to me. Looking forward to getting to know you guys more in the comments section. Thank you guys very much. I love you and have a great one.